Hello, and welcome to The Rare Agent, where we pull back the curtain on all things real estate. We're your hosts, Christina, myself, and Murray, offering a judgment-free space for collaboration over competition. In today's episode, we are joined with the dynamic mortgage duo Erin Kouvertaris and Kandis Haas. These brokers go beyond the ordinary, showcasing an unmatched blend of dedication and client-focused passion that truly sets them apart in the realm of mortgages. Welcome.
Thank you for the introduction. Thank you for having us.
You're welcome.
I love that.
I'm so excited. I've been excited since you guys agreed to come on, because I feel like it's going to be such a good episode because we know each other.
Well, you guys have a background. You did a podcast before.
Yeah.
We had a podcast.
Right. You can dig into the archives.
Yeah, it's still on there. It's on the web.
Royal LePage, right?
When we were at Royal, were we at Royal
Yes.
LePage?
We were all at Royal LePage together.
I
think I switched to Homeward at that point.
Oh, you
right.
did.
Yeah,
Right.
but we were doing it at Royal
I would come
LePage.
to you.
Yeah.
What was the podcast called?
The Ekendel podcast. EK for Erin Kouvertaris.
And Del.
Del for Delajanis.
Wow.
Yeah.
Reunited at last.
Yeah. Finally. It's about time.
But that was all audio back in the day, so now people actually can see who we are.
Yeah, absolutely.
Hey, our long-term followers, this is what we look like.
We're back.
Yeah. Did you miss us?
Yeah.
How many years have it been? 10?
Oh, it's been maybe not as long as 10, but
We did
6 or 7.
2018. We filmed it in 2018.
Okay, so 5 years.
Right before Gabriel.
Right.
That was like the year before
I
Gabriel.
had my son. I got pregnant in 2018 and had him in 2019. So
That changes things a bit.
it changes things. Yeah.
Life was changing. Okay, awesome. So tell our viewers a bit about yourselves and how you guys came together in the mortgage world.
Go ahead.
Okay, so I kind of accidentally got into mortgages. I started with a summer job at a mortgage lender, like working for a lender, and kind of stayed on and worked my way up a little bit. And I was more on the underwriting side of things. And then I was introduced to Erin, who was looking for help, and we met, hit it off, and I swapped over to the other side of the business and have been with her since
So she
2017.
started. Yeah, we met in 2016. Started working together in Jan of 2017. So we have our 7-year anniversary coming up.
We do.
I
what
had
did we buy
already.
people 7 years? What did we buy people at 7 years?
I don't know, because 7 years can be
Wood or
considered-
something? Is it anything?
Oh, I don't know. There's always something that people buy people. Anyways,
I'll Google it.
Is it the
my
eight-
ADD
is it the
brain is like,
8-year itch or the 7-year?
what do you buy people at 7
yeah.
For me, it's 5.
I'm like 7 or 8 year itch, and she's like 5.
I never got past
We have
that.
time till the 7-year itch kicks in.
You're good. You're good.
And for me, I graduated, like I went to university in Concordia in Montreal because I'm born and raised there. I majored in finance. I always knew I wanted to get into finance, but I thought when I was like 20 that I wanted to be a stockbroker. I had always also been involved in real estate in Montreal because my father owned at the time a management company. He would run about 100 rental units, and I helped with a lot of the financials there, and like a lot of the accounting stuff, even collecting rents, representing him at rental boards when he was out of town. So I kind of had a taste of real estate. Then I decided to pick up and move everything to Toronto. And at the time, because I had knowledge in real estate, I started in a real estate company. You all know Royal LePage Estate. I'm still partnered up with them as well as one of the brokerage that I work as an in-house mortgage broker. And that broker owner decided to open up a mortgage company. And at the time, I was like, what a great opportunity. I can use my skills to become a mortgage broker in addition to be helping him with like admin. And I was a controller for the company, basically. And he allowed me to do so, which was the best thing I could have done in my life. I've never looked back. I've been a mortgage agent now going on 14 years. Broker, actually, I should say, going on 14 years. But funny enough, when I started at Royal LePage in admin, Christina was my trainer.
Oh, wow.
Yeah.
Oh, I didn't know that.
So it's full circle.
That's
really,
so
really
crazy.
full
We've known
circle.
each other for
Since 2006.
Yeah,
Yeah.
She gave me her resume.
Yeah.
Oh,
And she was like,
Yeah.
we should hire her.
Well, Thank you, Christina.
Yeah, honestly, right place, right time. Like it all.
started it.
Yeah, it was. She was a bombshell as soon as she walked into that office. I was like, she's lovely, and we trained, and she already knew what she was doing, and she's such an overachiever that it was like easy, and she just worked herself up.
Yeah, so it went from like secretary to admin, and then
Yeah.
they opened up the mortgage division, and I joined, like I got my license
Oh, and then
right
I became
away.
her deal secretary when she was in the mortgage.
Wow.
And then you became a realtor, and we started working together. So it was really a natural progression, but exactly where I wanted to be. Yeah, yeah.
And I know you and Mary Jo have been friends for a long time as
Same
well.
years.
Did you guys meet there? Is
Yeah.
that how it all
did.
Is that where it all
she
began?
would hand me her deals so I can do the clerical work.
Okay. Okay.
Yeah, I didn't mean Erin actually didn't
And back
know
in
each
those days,
other.
you probably physically had to hand them.
We
Yeah,
did.
yeah. Back in the
Here, can you
paper
staple this
days,
for me?
right?
Yeah.
We had a checklist and everything. It's
Remember
initial law.
faxing
Yeah.
and pagers? Oh God.
We had the pagers back then. In 2006, my son was born, so I wasn't even, I don't know if I was really around all that much.
You weren't, but I think it was around 2007 where I started seeing you coming into the office, and we really did hit it off right away. Right
Yeah.
away. Like I would.
I was bringing my child with me.
You bringing your child with you,
Of
me,
course you were.
spending social days together and
Yeah.
hanging out, and yeah, we've been friends for a long time.
Yeah.
yeah.
I think it's really important to see like all the different steps that, like you're saying, you're bringing your child in. People see successful people and they just assume that maybe it was easy or they got lucky, but they don't actually see all the steps and the grind and the hardship and the failures and all the things, like the whole journey of getting to that point is always really interesting to see. And really what I noticed a lot is it's connections, right? It's like
Totally.
if you're able to connect to people and you're driven and you have discipline and you're, focus on the right thing, you can kind of grow your business and go
Organically.
organically and do
Yeah.
it the way you're supposed to. Because like you said, originally you started off thinking you were going to go kind of a similar path, but totally different. And look where you ended up. And would you
and
change anything?
I wouldn't have it any other
Exactly.
way. Any other way.
And look at the
Exactly where I want to
relationships
be.
you still have along the way.
Yeah.
And how they start. Like, I didn't even know that
Yeah.
about you and Christina.
I didn't know that either, actually.
Well, you learn something
I
new
know.
every day.
It's so funny. I thought honestly it was just common. Like I guess you were because you were having your son at the time. That
Yeah.
you
And
were
it's been so many years in between that you tend to forget little details until they're brought up again.
Exactly. Yeah, it's been a wild and crazy and awesome ride all at once, and I wouldn't change anything for the world.
I've witnessed you grow, like literally from that time as an admin to going through the stages of getting your broker's license. Well, actually starting in mortgages, getting your broker's license,
Yeah.
and just the progression you had to go through. We even shared an assistant at one time.
We did.
Our very
Did
first
you?
assistant was between me and Erin.
Yeah.
Which was
Actually, maybe you did. I think actually I did know that, but that was like at the beginning when you
At the
first
very
started in
beginning of
mortgages?
hiring assistants,
Yeah.
and then we decided we should go full time with assistants, and then
well, we were just getting
we
our
were
feet wet
growing
with
in
it.
our
Yeah.
business, and
Yeah.
we needed more help. I met you, luckily. She was introduced by a mutual friend that also worked for a lender, and I'm like, great underwriting background. Like I had separate strengths. I had like that clerical and knowing a lot of realtors, but Kandis had worked for a lender.
Yeah.
A few lenders, and
few lenders,
it is
yeah.
a different perspective when you know how the bank or the lender itself is going to look at the application, and certain little nuances that maybe
what is one of the
happens behind the scenes that you don't
That you
don't
wouldn't know as a
realize.
broker because you've never worked that side of the job.
Yeah.
Yeah.
Well,
Right.
the things, and I've learned this through you, just the little things that you can do to tweak a deal because you happen to know the background with the underwriters and what they would look for that you wouldn't know.
100%.
Yeah.
Because we're given a set of guidelines. And
They're vague.
they're vague.
They're very vague.
And you really need to know the lender, know the underwriters that are going to pick up your files, know the business development managers that want to, convince you to send them the business, and then really know where you can ask for exceptions and get the deals done
And show a story.
and show a story,
Yeah.
a story that I believe in and that I can convince other people to believe in as well, right?
That's so much of, I think,
Our job.
what we do is storytelling. It's getting that information from the client and then how do we present this in a way that is going to make sense, adequately explain the situation and their credit worthiness, and
get the deal done,
get it done.
Yeah.
approved, and closed.
Yeah.
I don't
Right.
think people realize the steps involved in
Lots.
actually, yeah.
Now more than ever.
Oh yeah.
What is one of the most radical changes you say in like the background underwriting, like that you've thought, oh, this is like one of the
Honestly, I
biggest
don't think
changes for you?
it's not, there's not too much like in the background that I don't think like the average broker would be aware of. It's more just like I was really heavily focused when I was working with a lender on document review. So, you know, when a client is sending you 90 days of bank statements to show their down payment, I hope you would attest to this. I am a pro at analyzing
I
those
couldn't
bank
do what she
statements
does.
and cross-referencing where this transfer came from, and now I need 90 days from that. Like it's a lot of like I remember back in the day, I had one monitor and I was looking at all these bank statements. I would print them all out and lay them on the floor in the office.
And you had fun doing it
And
too, didn't you?
I did, because it's like it's
a puzzle.
problem solving, right?
Yeah.
And every deal and every down payment or whatever, there's something different. No two deals are the same, and yeah, there's a lot of problem solving, and especially now on this side of things with brokering, that's, I would say, like number one. If I were to describe what a mortgage broker does, it's problem solve.
Yeah, 100%.
Yeah, and that's the big difference between having a mortgage broker and just going directly into a bank, right? This is what I try to explain to our clients is that when you hire a mortgage broker, you're hiring their whole team, all their relationships, their expertise, all the little nuances that they can push a deal through, whereas maybe a bank would just not have the knowledge or the ability even to do that.
Right, because a bank will deal, they can only sell the products that the bank offers.
Exactly.
As mortgage brokers, like we have access to 26 different lenders.
Yes.
That allows us to,
And B lenders.
A, then B, then
Yeah.
private. Privates aren't even included in those 26. And we know that, okay, you know what, this deal for whatever reason won't fit this and that lender, but it can
it's
certainly
perfect
be
for
a
this.
good fit for this particular lender. And we explain that to the client. And they know exactly what they're getting themselves into before we even submit an application for an approval.
But you have to constantly know the programs then that are being offered by each bank,
Yeah.
which are changing constantly
Yeah.
with the rates and all the different rules that they keep bringing out.
Yeah, like the stress test was a big one, right? Like we
huge.
used to qualify mortgages without a stress test, and now we do. Well, it's been a few years now, and we're all accustomed to that. But that was definitely a big adjustment for everyone, for buyers, realizing that they're qualifying for less, for brokers to now remember, like, oh my God, I have to qualify this file on 2%
What do they have
higher.
to qualify at right now?
It's the greater of the benchmark rate, which hasn't even been a thing, or 2% higher than the rate that they're getting on their contract. So basically 2% higher than the rate that they're actually getting. So if they're getting a rate in the mid fives, we need to qualify them in the mid sevens.
Okay.
So I think the question that everybody is kind of thinking now is have these rate hikes affected the business, and what are you seeing that's different now than, let's say, 6 months ago or a year ago? Yeah.
Right. So obviously people are qualifying for less. But, we're coaching them along with the realtors coaching them, adjusting their budgets, really talking to them about like their needs and their wants. Perhaps it means that, you know what, you may not buy right in the heart of Toronto. You may have to buy in the GTA, in the outskirts, and maybe that'll work for that particular client. Or you may need to buy with someone else, like with your best friend, with your cousin, with your sibling, or have a parent as a co-signer. We're really good in finding the solution, but it may not be as cookie cutter as it could have once been.
Exactly. So it's more like just compromising.
100%.
Compromising to get into the market.
Exactly.
Earn some sweat
equity?
equity. Thank you. Wow. I told you guys I needed another coffee. Earn some equity, and then actually, so instead of doing just like from, not owning anything to your dream home, you're going to do like a few steps in between. Right?
100%.
Yeah.
And our mentality is always like, if you have the ability to get into the market, even if it's not your forever home, get into the market.
I think that's the
Absolutely.
mindset we need to change, is that people are like, oh, I'm going to buy this house, but it has to have all these things. It needs to be my dream home. And it's like, no, there's steps to that, and I think people have forgotten that.
And there's always been steps to that. Like,
Yeah.
and you're right. People have forgotten that. Like, I've never known a first-time home buyer that bought their first dream home and have lived in there for 40 years.
Exactly.
It really doesn't happen that way.
No.
Not anymore. It was more of
Almost
a thing
never,
in the
though.
80s.
Yeah. Yeah,
But people
maybe
have
the
gotten
80s.
accustomed
Sorry,
to
I
being
wasn't a
there.
broker.
No, but I'm thinking it's more of an older mentality, like the 90s.
And
kids
neither
were
were
like
you,
80s.
Christina.
I'm thinking my parents are still in the house I grew up with. So like I think it's
Totally.
just like
Yeah, my grandparents.
yeah,
too.
the older
Yeah.
I think it's just an older demographic because you could afford a family home back in the day, whereas now it's completely different. Like the financing is different.
Home
Affordability.
prices
Yeah.
are
Prices are way
different.
Cost of
different.
life and what people want in their lives is different. So
Yeah.
I think you like that latter step is been around for a long time, but I think now more than ever people have just
pretty
accepted
important.
it.
It's
Yeah.
pretty important now,
And
I think
parents accept it. That's another big thing because a lot of people in the beginning of my career would be like, the parents would chime in, like, "Why can't you need something bigger? Why are you going in a small house?"
Right.
And it's like, but you can't afford a bigger house.
the
You're
parents are
probably
paying for it,
getting
though.
less slack on that, though,
Yeah,
right?
a
Like
lot
people
less.
are
Yeah.
understanding that now for sure.
You are seeing a lot of parents putting on the
Helping.
deposit or co-ownership. I'm
Gifts,
assuming, like
co-ownership.
Yeah, bank a mom
Absolutely.
and dad definitely helps a lot of, especially first-time home buyers, get into the market.
Yeah, we've definitely seen more of that.
Yeah.
Either by like larger gifts from family or a parents co-signing for their children, or even parents buying the property outright as a second home for their children to live in.
and they can put that so they wouldn't have to pay capital gains on that because they just put their family into it, right? So if they ever, let's say they ever sold it, but their family's living in it, it would never be considered a second home.
I don't know about that. I think anything outside of your principal residence
Mm-hmm.
is subject to capital gains. But the good news is that you can tweak the way your name goes on title on interest. So even if you're buying the house and like your kids are on the mortgage and title, you could put yourself as a parent at 1% interest
Mm-hmm.
and 99% interest going on the first-time homebuyer children. So then even if the parent, when they sell, if the parent has to pay capital gains, it's only on that 1%.
But that's something you have to structure from the very beginning, or
through your lawyer, through the real
Yeah.
estate lawyer.
it can't be done at any time. It has to be done at the very beginning.
I believe it has to be done at the very beginning.
Okay.
And a lot of those are the questions that arise when parents get involved in the purchase
Yeah.
for their kids.
Yeah, because
And
it would come
I
up.
do often refer, this is what I know. Please refer back to your real estate lawyer. They're the experts in this.
It's not a bad idea.
And I think that's what's really important right now in this type of market is you have to have a team of people, and that's why we feel confident advising our clients is that we have a team of people like yourselves that can advise our clients in the areas that we are not, we don't know everything about. We have ideas, but it's really good to know what all your options are.
100%. And we work the same way. We are the experts when it comes to mortgage financing. We do know a lot about, what a real estate lawyer does on their end. We know a lot about what an accountants do for our clients. But when the capital gains question comes up, here's what I know. Refer back to your accountant.
Absolutely.
Yeah.
Here's
'cause
what I
everybody does
know.
stuff
Refer back to
differently.
your real estate lawyer. They shouldn't be taking what I'm telling them
Yeah.
to heart without checking with the right
The appropriate
professionals.
person,
Yeah,
yeah.
exactly.
And that's why you have a team.
And that's why
Right.
we have a
You
team.
you
we
have
have a team of
experts in
realtors.
certain
We have a
things
team of
instead of one
accountants,
person.
of lawyers. Exactly.
I think we've all run into people who try to be everything and it doesn't really work.
It doesn't work. You can't wear multiple hats. Like if you're going to be a professional, just take one industry and be really, really, really good at that.
Yep.
Exactly. I don't want to be good at everything. I just want to be good at what I like.
Real estate and for us mortgages. Absolutely.
Exactly.
Yeah.
Where do you see things going with inflation right now?
Well, the good news is the October numbers came out today. Inflation has gone down from 3.8 to 3.1.
Wow, that's actually
That's a
big.
nice,
When
yeah.
you're,
That's a celebration.
That's a really, really good sign.
It just feels like some
Finally,
positivity.
some positive news.
Yeah, and consumers don't need much of that. Like, I feel like the last Bank of Canada announcement date, when the Bank of Canada remained steady, didn't make any changes. Motivated buyers, we saw an influx of more buyers getting into the market and buying,
Yep.
right?
Yep.
Now with these new numbers will motivate these buyers to maybe not have to wait till the spring or till next year or whatever the case may be, because these are very, very good signs for rates to eventually start coming back down.
And we've already seen it happening in the last week or
Fixed
so.
rates.
Fixed rates have been slowly kind of on their way down. So hopefully that's the
Like, what's the best
trajectory.
fixed rate you've seen so far?
It depends on the type of mortgage.
Yeah.
So
That's a hard question.
Sorry.
Yeah,
I
no,
know.
it's okay. We'll try to answer as best as we can.
yeah.
Fixed rates are really dependent on purchase price. Is the purchase price less or more than $1 million? Another one is how much is your down payment? Is it 5%? Is it 20%? Or is it 35%?
But
Another
35%
one
is more commercial, no? Or is it based on income?
but you may, on residential, if you buy for less than $1 million and you put 35% down, even though you don't pay for the mortgage default insurance, the lender will back end insure the mortgage and give you preferential rates.
Yeah.
Oh, okay.
So there's so many different types of rates, but I want to say overall, it's either the insurable mortgages when a purchase is less than $1 million and the down payment is 35% down or more, or insured mortgages, high ratio, anything less than 20%. Exactly. And for those, oh my God, I just saw the group like 539.
Yeah.
Wow.
Whereas a couple weeks ago, they were in the sixes.
Yeah.
Wow.
Or like high fives.
539 fixed for 5 years?
For
That
5
would be a
years.
5 year, yeah.
Now, if we delve into what other terms are, like
Yeah.
we're going to be here for several hours.
Yeah.
But just to kind of give you an idea, yeah, they have started dropping. And when the Bank of Canada makes announcements, that affects the overnight key interest rate, which you call the policy rate. The BOC didn't go up last time. The policy rate didn't go up last time. The next announcement date is in December. A lot of economists are saying it won't go up again in December. And I actually recently sat down with the deputy chief economist at TD Bank. And their projections is that we've already reached the peak for variable rates, meaning prime rate.
Yeah.
And now we should be expecting the first drop in prime as early as April 2024.
Okay.
And his outlook was even more positive than that, saying that by the end of 2024, which is about a year or so from now, we should have seen prime rate go down by 100 to 125 basis points. That's 1 to 1.25 less than what we are today. So that's really, really,
That's
really
encouraging.
good
Yeah.
for variable rate customers who have been meaningfully impacted
Yeah.
in the last year and
I
a half.
love that
Yeah.
word meaningfully because
It's a good word.
Oh,
Yeah.
it is spot on.
Yeah.
Yes.
Yeah.
Yes.
Christmas? No.
Not this year.
Have you seen
Next year. When the rates come down.
Right. So there are some good news for sure coming up when it comes to rates and affordability. We just need to be a little bit more patient. But overall, Canadians have been quite resilient.
Yeah.
You have to say, like,
I agree.
we've seen rates go up since March of 2022. We're now on November
And there still hasn't been
2023.
any major panic, nothing.
No major
Like,
panic. There are some gloom numbers, like as far as I just recently read, credit card debt in Canada has reached at $100 billion. That's the highest number of credit card debt ever recorded in history in Canada.
wow.
People are living off credit right now, waiting for the rates to come down. But the good news is
'Cause all their
we are
disposable
expecting them to continue to go down,
Yeah.
right? Yeah.
You seem more optimistic
I
talking
am.
about it now than when we were, let's say, in August when we were having
Totally,
conversations.
totally.
Which is nice because I feel the optimism now.
Yeah.
There was false optimism going through the summer and then it just never showed up.
Mm-hmm.
And now I feel like, okay.
I just know we're still waiting.
You can tell your clients,
Yeah, waiting till
there's
spring
a
might
silver lining.
Yeah.
Yeah.
When
absolutely.
is the first rate announcement in the new year?
Jan? Do I know the date?
It's
I
usually-
should know the date.
I don't have them memorized, but I think it's January. I want to say January 20 something.
Yeah. It's
Okay.
like
in and
January.
around there.
Yeah.
Okay, so they're not expecting them to actually go down until maybe
No, I
April.
mean, look, you're going to talk to a lot of different economists
Yeah,
with a lot of different opinions, but the general consensus is that we have reached the peak. And if there is one more increase, there could be just one. And usually the increases happen in 1/4 point. I choose to believe there are no more coming. And then in the new year, everybody's saying that the rate drops will start happening between April and June.
Okay.
The most optimistic being in April.
So they would probably just hold steady.
Hold steady up until then. I think that's enough for consumers to start feeling the confidence again and getting back into the market. Not that we're at a standstill. We can absolutely say that we're
still
working on clients purchasing, but it'll give them that motivation they need to really start, to
Remove the
boost
fear.
remove the fear, boost the economy.
Yeah.
We need that right now.
I think so. I think we're also I think buyers it's like anything that's come into the market, like the land transfer tax when it was first introduced.
2007, I think.
People had to freak out and then they got used to it.
It just becomes the norm.
Yeah. So this is the new norm.
Human behavior.
Yeah.
Like rates, I
Human
don't think are going to
psychology.
come back down to what we've seen them at historic lows.
So there's another thing that we can talk about. So everybody's asking, what is the normal rate? What will be the new normal rate? Economists use a neutral rate as their preferred term to that. So right now, the overnight key interest rate with the Bank of Canada is 5%. They believe that the economy will be steady and we're not going to be worried about inflation numbers once that overnight rate goes to 2.5. So our normal rates will be 2.5% lower than what they are today. That is what the predictions are.
Okay.
And I know we've said this a million times, but nobody has a crystal ball. And our economy, our economy is based on so many more global economies, the U.S. economy.
Yes.
But I do believe that it'll be somewhere there. We're probably not going to see the ones and the twos anymore, but it isn't unlikely that we're going to see prime rate hit below 5%, and that fixed rates end up hovering in the mid 3s to mid 4s.
That's what I was thinking.
Okay.
That seems normal.
Which
it
is-
seems comfortable.
That's encouraging.
Absolutely. Pre 2018, 2019, that's where rates were. And no one had any concerns, right? So that's what we're looking to get to.
I feel like we're in this period of time is very similar to the end of 2020. This is what it feels like to me, where people are just waiting for the bottom to happen. And then usually by January, February, they've missed it.
Yeah.
Right.
And then the house prices are going to
Multiple start to happen again. Like
no conditions in any of your offers, or your offers
yeah,
gonna
like
be
we
thrown
actually
away.
like not having to go through this competition. This is a good time for buyers
we
to get
agree.
in and negotiate, and actually we can do our job. Like we can negotiate on their behalf. They can get a home inspection. They can get a financing condition. And now's the best time ever.
And this is
really.
what we're seeing: smart investors out there right now purchasing when they can at the best, available prices.
And strategically, you can plan for that by obtaining maybe not a 5-year fixed mortgage, maybe a 2 or a 3 year.
Exactly.
So if you can afford those payments today, you're going to be most likely in a much better position if you hold on to the properry in 2 to 3 years' time.
Exactly.
When your mortgage is up for renewal and you're renewing at a
hallelujah.
significantly
Thank you.
lower rate. You're very welcome.
How are you coaching your clients that received mortgages in 2019 and now they know that they're coming up for renewals and their rates are going to, in some cases, maybe double? How are you coaching those people? How are you helping them prepare?
Wanna take this
we're
one? Yeah.
really, really good about proactively reaching out to all of our clients that have mortgages coming up for renewal. Our database is pretty spot on, and we run reports every month to say, who's coming up for renewal in the next
and not
3 to 4
exactly.
months.
Like not next month. Like we're
doing it.
reaching out to clients 4 to 6 months
That's really
before their
good.
maturity date.
Just to get it on their mind, like
Yeah.
we'll send an email, hey, your mortgage is coming up in whatever, would love to help you again. And, we just start the conversation early. Especially in the last year, that's proved really, really beneficial when rates were still kind of increasing, because we were in a position where we could start working on a client's, renewal application
Early.
4 months in advance of the renewal.
Locking
and
in a low
locking
rate
in a
by the time they
rate,
fund.
refreshing that rate hold right up until the renewal, and making sure that if rates had continued to go up, we had something secured 4 months
So you
ago.
could do
for
that.
their-
So even if they're already locked in, they're not breaking their mortgage, but you can secure a new
Because
rate.
we start the application as a pre-approval, and we refresh that pre-approval if their maturity date hasn't come up. So we're constantly looking out. Okay, rates are still low. Oh, we just heard of a lender going up tomorrow or the day after. We're
Rate
going
hold
to refresh
everybody.
that pre-approval again for another 128 days.
Yeah.
And we did a lot of that. We always do a lot of that. But we did a lot of that in an increasing rate environment where we know rates were going to continue to increase. And I think we helped out a lot of clients.
Yeah.
Well, that's
that
what sets
way.
you apart from other professionals in your industry, because I know clients who did not have that, and they come to us like when it's too late and they're just like, oh my God, what do we do? But they didn't have their, their team looking out for them like that. So that makes a really huge difference.
Yeah. And I don't think like you necessarily would get that at a bank
wouldn't.
unless the client is very proactive. And even then,
They
we're
have to
available.
lead it. They have to
Yeah.
be the ones
Absolutely
going in
have
and
to lead
checking.
it. Yeah.
And
Most-
most people don't.
Yeah, exactly.
Or they start saying, "Oh, I was talking to my mortgage broker," and they're like, "Oh, you were talking to somebody else?"
Who was it? We've been through a few deals this year where exactly that happened, where we're actually backpedaling trying to help people because they were just advised so poorly or not at all.
Like, talk to us first.
Yeah.
But sometimes they just don't know. They just don't
Yeah.
realize that they should, consult and talk to their realtors before things go sideways, or they hire other people. Like, I've had so many instances where they've hired a different lawyer or hired, working with a cousin or whatever it is. And you don't realize what you're actually, like the risk that you're taking.
Yeah, you're doing yourself a
Yeah.
disservice.
Yeah.
It's nice to know that there's a team looking out for every aspect of that
Yeah.
transaction.
Yeah.
And I know you ladies do that, and we do that as well.
Yeah.
Oftentimes, they will end up going with a real estate lawyer we've recommended. When a client comes to us before they've even reached out to a realtor, we refer them to the realtors that we know, including yourselves, that are very capable, very hands-on, similar to our style. Down to like home inspectors, down to home insurance companies. Like, we really want to be that one-stop shop for the client.
With multiple experiences.
And because we know we're very good at reaching out to the lawyer when we need something, reaching out to the home inspection if we need a copy of the report, which is a rare thing, but sometimes we do.
Yeah.
Reaching out to anyone that
I know
we've-
that when you guys are on a deal with me,
You're not
I don't,
worried?
I don't have to worry about it.
Yeah, I don't either. I'm
don't
literally
have
like,
to worry about
Erin's got it. Here, talk to Erin.
I get nervous when people, have you talked to your mortgage broker? They're like, no, not yet. I was like, OMG. I was like, I don't even need to tell Erin to talk to follow up with them.
Yeah.
So that part of it, I don't think people understand how
It's
much
peace of mind.
peace of mind and how much stress you relieve by just being on top of it.
I don't think people even check their mortgages, to be honest. Like, it's happened to me in the past too, like with an investment property that I didn't realize I had to renew, and it automatically renewed on me.
Yeah.
And I didn't like that.
No.
But I didn't know until I learned the hard way, right? That I was
So how do
automatically.
you get out of that? Is there anything you can do?
I
at that
couldn't
point?
do anything at the time because it just rolled over into a new 2-year fixed or something like that. But this was an investment property. But when I went through it myself, then I was like, oh, okay, now I need to pay attention.
Right.
And it's something everybody should do. Like every year, whatever, you should be checking your mortgage
Yeah.
and
Totally.
see, okay, where am I at? When is it coming due?
And what
Should
are
I-
the terms?
What are the
You should know what
terms?
the terms are, because not
Exactly.
all mortgages, as you guys know very well, are equal. So
course
you
not.
might get a good rate, but what other,
100%. We
Conditions.
stress on the
So-
terms
Yeah.
so much.
What's an
Rate is
example of some of
important.
the terms?
like a breakage fee?
A
Like,
high
yeah,
breakage
there's-
fee,
there's
or the
certain
fact
lenders
that it's
that'll
not
have-
portable when the client thinks it is.
Yeah.
Yeah. But they have, it's the lowest rate. And they're like, I saw this online and that's the rate that I want. And we're like, well,
Yeah.
there's a sales only clause. You can never refinance
But
this
you-
property.
Yeah.
You can only get
mid-term.
out of that mortage if you
sell
sell the
it.
property.
Yeah, so
It's
people
like,
don't
but
realize.
it's 0.05% lower than what you presented to me. I'm like, yeah, because we've presented you with a
a very flexible mortgage. We don't really believe in the no frills.
No.
We have access to them. I don't believe we ever put them forth to a client unless the client comes to us and says, I saw this rate. Tell me about this rate. And I'll tell him, I can offer you this rate. I don't love this product. And I'll give you all the reasons why. And and it's not me trying to sway them to go to another lender or to use another product. It's because I truly don't believe in that product, and it's not a product that I would ever take on myself.
Yeah.
So why would I, sell it to a client? Like, it just doesn't feel right.
And sometimes what you're gaining is actually not even worth it, right?
Right.
It's like what you're gaining versus what you could be leaving on the table in the long term is not worth it.
100%.
And so much of our job is educating clients, so whether they're interested in one of these no-frill products or not, we're still going through
Here's what you
every
get.
term, all the, the intricacies, the fine print related
Prepayment
to it.
privileges,
Just so they are
portability
making,
options.
the most educated decision, and they know what it is that they're signing up for, so there aren't regrets. And
it's not only when they're signing.
it's when we're presenting them with the options, we break it all.
Yeah. And
all
it's
down.
even when they're looking at properties.
Yeah.
We tell our clients, do not put an offer on a property without sharing the listing, whether it comes from you or your realtor. Share the listing with us. Let me read what how the listing reads. Like, I want to make sure there's no red flags for the bank.
Yeah, like if it says as is.
Sold as is, renovator's dream, right? Like all the wording that could cause red flags for a bank.
No
And then we run
pictures.
no interior pictures, visible foundation cracks on the pictures. Like, we've seen it all, right? And so we'll tell them, share the listing. Let us run the monthly carrying costs for you, the closing costs for you. We really want you to get into this knowing exactly what it's going to cost you on a monthly basis and to close to ensure that you're comfortable with these
Well,
payments.
and considering all their other debts.
And
right?
considering all their other
here's
debts.
what your house is going to cost, but don't forget, you've got 2 kids in daycare
and
you've got a
daycare and car payments.
and-
And
which I think people tend to forget. Like, you're not just buying a house; you still have to live
Yeah.
outside of that house.
And another really good point is you guys educate us too. So how many times have we heard that from be careful how you put up a listing, right? If we didn't have that type of education from people that we trust, we wouldn't be able to do that full service for our clients of like wording it in ways that it's not going to be a red flag to the bank.
Yeah.
That's why it's also important to have that team aspect, right? Because
For sure.
because by the time it gets in front of a mortgage broker, it's too late.
Yeah.
What are you going to do? Go back and edit the
Change
listing?
it.
Yeah, well, and they can check that too. So
I know.
Yeah.
I have
can
done
see-
it.
they
I'm not
can
going to lie.
they can see the history.
I've actually called a listing agent and said, "Can you change this? Because this is
it just doesn't read well. Like,
if it's my buyer, I know they're not going to be able to get a mortgage if your listing says that. So can you
I've
change
done the same
that?"
thing,
Yeah, you
and
have
I've
to-
actually fought appraisals as well.
Yeah.
because
I was going to ask, how does fighting an appraisal work? How do you guys build?
We've been successful.
We haven't had to do it.
We haven't had to do it very much.
We've done it together a few times.
Yeah.
Where we've gone back
only
and
on
I'm
MJ's
like,
deals.
well, because you think it's going to be fine. Like, there's no reason why it shouldn't qualify, and then the appraisal comes in low, and you're like, wait a second, why?
Yeah.
And then I have to go back and I have to pull the listings, and I'm on the phone with her. I'm like, I got these 3
Justify this
properties.
price.
Here's what it has. Why didn't this go through? And then we'll work together on it. But
We work with the appraiser. We send them additional comparables that he may not have. Not that I'm saying they're not doing their job. I'm sure they are. But maybe a
sometimes they don't-
recent comparable that he didn't capture when he was drafting up the report a week ago. And so maybe that recent comparable is an exact match of the property that, your client is looking to buy and sold for the exact price that we need your client's appraisal to come in at.
yeah.
And so we have preferred appraisers as well.
Yeah.
We've worked with appraisers that will work with us. Like, obviously if an appraisal comes in $300,000 less than the purchase price, there's not much we can do.
No, but if it's
But
within
if it's like
100
20,
grand,
50, we've usually managed to contest them with good reason. And the appraiser has agreed. It needed to go through escalations, but
It
again,
happened a lot in COVID, I think, because people
Yeah.
weren't actually getting into the properties, so they couldn't actually see them.
yes.
So, and if the listing's not written appropriately, right? If we happen to know, hey, there's another property on there you didn't see because you couldn't tell based on what it was written on the listing, right? So,
Yeah.
but one of the first things that we do when we take on a client is we are like, okay, what's your mortgage? What are the details of your
Yeah.
mortgage?
No, we don't even start. We don't
No.
even start until they've talked to you guys or just like at least have an idea of what they're doing.
Yeah.
Oh, yeah. Even with sellers, we're like, okay, you know, have you spoken to whoever you're doing your mortgage with?
Yeah.
Is there a penalty? Can you port? You
Yes.
know, when is your mortgage due?
And we can tell because whenever we get a referral from you ladies, it's a real intro. Like it's like, here's so and so. Like I'm introducing you to them. They're my clients. They're currently looking to sell a property. They have a mortgage on it. This is the balance.
Yeah.
Like you're really giving us a lot of information to start with, and we appreciate that.
Totally.
And then
Then
obviously
we know
there's
you can
some
do a better
fault.
job helping our client, right?
Yeah,
Like,
the
that's whole
more we
point.
know, the we're representing the client, right? So the more we know on their financial profile, the not just the easier it makes our job or the transaction, but we can provide them with more accurate information, right? Yeah.
Not to mention, I'm sure it makes your jobs easier too. You're not just, driving around, spending your whole weekend, taking them to houses that
They can't afford
they
it.
can't afford.
That was my first year in real estate.
Yeah.
I think all of us have spent time spinning our wheels.
Yeah, it's trial and error. Yeah, you live and learn, trial and error.
I'm just a people pleaser.
But it's also a tease for them. If you're the professional and you're like making them believe that they can afford something that they really can't, that's also not good for them.
There's a bunch of property shows out there that do that specifically. They'll go and show the property and they'll be like, oh, guess how much this home is, but you can't afford it.
What is that about?
Like, this one's way outside
just
your
me.
budget.
But I needed to show it to you in
Yeah,
case
just
you
so
can
you know.
come up with an extra 500,000.
Oh, but here's this dump over here. So maybe you can afford
This
this one.
isn't your price
yeah,
point.
just wanted to show you the difference. Yeah, those shows are just mean.
Yeah, they are. Poor buyers.
What about investment properties right now? Like, do you see a lot of people buying investment properties? Are they a good option right now? Like,
I'm not. Are we? We're not really working on a lot of investment properties. We're looking at
Not a lot.
a lot of either upsizing existing homeowners looking to buy a bigger property. We're looking at a lot of first-time home buyers.
I would say we have more buyers right now looking to buy, not necessarily a duplex maybe, but something with a rental suite in the basement because mortgage rates are a little bit higher. It's a really good
During the
option.
pandemic, nobody wanted them, and
Right?
now
And everybody does
is
because
coming.
it's like,
it's a huge selling feature now.
it'll help
Remember that
pay
house you were
those
trying to
higher
sell me to
costs.
get rid of it.
Yeah.
I had a property that I actually had to get rid of the side entrance because nobody wanted it.
Yeah, like they had it blocked off
In COVID.
Yeah,
This was
during
in COVID.
and they didn't want.
They
wanted
did not
to be able
want
to-
it.
They
Yeah.
wanted to get access
I
to the
didn't hear
basement.
about this.
We
That's
held
crazy.
back offers on it. It was on it was in East York somewhere. I can't remember the
Remember
name.
that. I was like, what is
but
happening?
we-
were working
Bizarre
together?
world.
Weird. Oh, okay.
Just don't use the side entrance.
No,
Like,
because there was no. They
wanted to-
couldn't get into that.
I bet you they've reopened that side door. I bet you they're renting it right
probably
now.
We
it
held
off.
back offers though, didn't get any, and we had over 60 showings, and it was an amazing house. And we actually spent the 10 grand to attach the basement again and remove the side entrance, and then we got more than we. It was crazy. It was just the craziest.
It was a really crazy market then.
Yeah.
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 yeah. This was it was just the beginning of COVID, I think, that we did this one.
Everybody was nuts around that time, including myself. So we can't really
and
we can't
interest
really
rates were so
account for any of
low
it.
at that time, weren't they? Like
Sorry.
at the beginning of COVID, like
Interest
that's
rates
when
were really low.
Interest rates were
COVID.
skydiving downwards.
Yeah, it was just
But you guys can qualify people now with a basement apartment not being legal,
yes. We have
Which
a
was-
lot
which
more
is
lenders.
options.
which is different
Yes.
than it was before.
Yes, because
I
we
remember that. I
really were
didn't know
very limited with our options before. We do have a lot more options with non-legal basement apartments.
Yeah, because that was a
absolutely.
big problem. We could never use the income of the basement.
Yeah.
So we
There's
you know,
still certain characteristics that it would have to have.
Yes.
Like an in-law suite is still, I would say, no. For additional rental
It
income.
has to have a separate entrance.
Separate entrance, its own kitchen, its own bathroom.
And closed
a closed
bedroom in most cases.
Interesting.
Yeah, it
Okay.
can be like
Yeah.
a studio. Basement
I only
apartment.
learned this because we did a property for a friend of mine recently, and she really needed that income to show to qualify,
and we did it.
and they did it. And I was
Yeah.
like, wait a second, I didn't know this was an option. So that just opened up a whole new avenue.
Absolutely.
Well, most basement apartments are not legal in Toronto.
I know.
Exactly it.
Yeah.
So
So don't say it on the listing. Like, just say, second
Income potential.
Income potential. Don't
always-
as soon as it says non-legal basement suite, the lender is going to be like, no, it's specifically
That'll deter the
states
lender.
that
And
Can you
it's
tell us again the
non-legal.
wording?
Pardon me?
Tell us the wording one more time.
Can we
Don't
we
say-
say
don't
we
say
don't say non-legal.
retrofit
Oh, don't
still?
say non-legal. Okay,
Yeah.
Or is
Yes.
that the same thing? Like
we
when we
can't
say
say
we
it
don't
is
Can't
a
say
basement.
you don't warrant retrofit. Or at
Don't
least
say that.
you can.
could.
Oh, okay.
Preferred on the agreement of purchase and sale, and then just say potential basement rental.
I always
rental
put
or
income
list.
With
potential.
separate entrance.
With separate entrance.
State the
Yeah.
separate entrance. That's a
So
selling
you're
feature
saying don't
for
put it
sure.
on the listing, but you can put it in your offer.
Yeah, like
Yeah,
the
that's true.
non-retrofit.
Because you want to
clause.
protect the
Yeah,
homeowner,
yeah.
right? Like
Yeah,
the
that's
seller.
true. We don't have to put on the listing as long as it's in the offer.
Income potential with separate entrance.
Yeah.
Careful. Unless, I guess if you have it in the agreement, but I've heard like people get taken to MLS about stuff like that.
As long as you put it in the agreement,
Yeah.
you'd
Yeah,
be good.
you can still
yeah.
put the non-retrofit clause in, right? It's just you don't need to put it on the listing.
yeah.
Yeah.
Yeah, I think that's going to be a game changer.
See, we're still learning things.
Yeah.
This is great.
But it is such an ever-changing market and
Yeah.
industry, and for yourselves as well, right? Like we're learning all the time, and we're very pro continuing education. We're constantly like on lender webinars, taking courses. You need to be apprised of what is going on in the market.
Yeah.
On a, if not daily, on a weekly basis. Like I read every article that comes my way, and I get a lot of articles daily.
I nerd out too a little bit in the mornings. Like I get
Yeah,
on and
that's
I
my
look at,
thing.
Yeah, I know. You're right.
I was reading articles this morning.
Sure you
on my
were.
way here.
But it's good because like you said, like there's so many things that have happened in the last little while, and it is very much a daily or weekly thing where week to week, like something that just happened can affect our clients on a significant way. So
100%.
we have to stay informed.
Do you have like a story that you can think of that's really kind of lights you up, that you know you helped somebody or that you're really proud of?
You want to say
There's a lot, but I would say there was one woman that we were working with this summer. She was going through a separation. She had
we
two-
get a lot of those.
We do get a lot of those. I would honestly say those ones make me feel the best. Not that they're going through a separation, but that we're able to help
Of
them,
course.
see the sun at the other end of the tunnel or whatever the saying is. I think I butchered that.
Yeah.
But no, and I mean, I ended up, she would call me every day crying.
I was on holiday.
Erin was in Greece. And this client, she wasn't calling about the process or anything to do with the financing, but she was having a lot of pushback from her soon-to-be ex-husband. I felt like I was, yes, I was her mortgage agent, but I was like her therapist as well. And we really, made we bonded. Like we were like buddies. We would text, and it ended up working out.
Lots of crying, lots of laughing, lots of like highs and lows, just because of what she was going through personally.
Yeah, and I think Erin and I really, one of our main priorities in our business and how we do it is we don't like to be transactional at all.
At all.
That's why
every
we all gel so
client,
well.
we really try to, to their comfort level, but try to make that personal connection with them and really see every person as a person and not just another stat on our funded list or whatever. So I think just having that one really stuck out to me because it was a little bit above and beyond what we normally experience with clients, but just her feeling that she could trust me with her financing and just unloading her
Unloading,
her
probably
life on
didn't have
me and
many more people to talk to. Some people don't want to burden their siblings or family with what's going on in their divorce. And
very
when
personal.
It is.
Yeah, when you're also talking about new financial responsibility that someone's going to take on by like carrying the household on their own, it is overwhelming. And we really do like sympathize or empathize. And there were hours and hours on the phone with her.
You don't get that from a bank.
Definitely not.
Never.
Be lucky if the bank even answers your call the first time you phone them. But
But it is knowing that you got her through that process.
Yeah.
At least you helped her on her journey.
yeah, and
through
now
it.
she's just started this new amazing chapter in her life, and it can only get better from here. She has that financial independence. She has a beautiful home with her
Beautiful.
children.
Yeah.
You
That's
know,
exciting
it's
to
just,
see.
Yeah, and just even playing a small part in that process is, I say, like the most rewarding.
You're
part of the
connected
job.
forever now.
I always say, I'm like,
100%. She was our client prior,
Mm-hmm.
and she came to us after the separation.
Mm-hmm.
And she wrote us a beautiful testimonial. Like, you know that you made an impact in this person's life
yeah,
above and beyond the finances.
Yeah.
And it's really like, this is why we do what we do.
yeah.
Yeah.
I always used to say, like, you know, when I was a little girl, I never dreamt about being a mortgage broker. You know, I was like, I want to calculate numbers and stuff when I'm a big girl.
I did.
No, but I mean, I really take pride in the fact that all of us, I think we can say this, like we play a role in making people's dreams come true. Like everybody dreams of owning a home or, you know, whatever that home looks like. But I love being a notch
piece.
in
Yeah.
the wheel that makes that happen. Like it just, that's my favorite part about
Yeah,
this
I
job
agree.
for sure.
I
Yeah.
agree.
I think we've all,
I think we all,
Dream makers.
we're all kind of on the same page with that. That's when we all work well together,
Yeah.
right?
Well, we've done it where, you know, a lot of times we have the same clients. So we've seen that process from start to finish where we've referred them to you. We're doing the selling part and we're like all in contact on a regular basis just to make sure that the whole thing goes smoothly.
It's such a collaboration
Yeah.
between so many parties that
And the client feels relieved. You know, they have so many things to look
Yes.
after, like, obtaining home insurance for the home that they're about to move into. And we're like,
packing, like
Changing your utilities.
Yeah,
and
Yeah, like,
absolutely.
there's so many
the fact
things.
that, I'm missing the Schedule B on the agreement of purchase and sale. Don't worry. I'm going to reach out to your realtor and get it. Like,
Yeah.
one less thing on their
Yes.
to-do list is huge for them.
Yeah.
Yeah.
And so we try to accommodate that way. And I think they're appreciative.
Yeah, that's the one thing our clients always say is we're so grateful to have you and your team because we felt like it was just a smooth, experience that they didn't have to worry about anything. That they get
Exactly.
relief, right, through that process.
100%. 100%.
That's probably our biggest why, right?
Yeah.
Knowing that we can do
Exactly.
that. I mean, we've had so many deals together. We know who we can refer people to, even sometimes on a personality basis. You just know who's going to
Yeah.
work with
Yeah.
who and support them, right? So it's always a good.
100%.
Yeah.
And I feel like my personality almost adjusts to the client's personality. Like, meaning I don't change who I am. I'm always real. But if they're like very anal when it comes to the numbers, I'm like, you want spreadsheets? I'll give you your spreadsheets, like
Yes.
if they're much more like maybe sentimental about, then we could do that too. Like
Yes.
we gauge depending on who the client is and
And their personality, what makes them
100%.
feel safe and secure, right?
Yeah,
some people
yeah,
want
yeah.
the bottom line. Some people want all the details.
Yeah.
Exactly.
Assessing the need, right? Yeah.
Totally.
I love that. All right. Well, we're going to lead into, because we're almost time, into our.
It's gone by so fast. Eh?
Wow.
We're having so much
So
fun. So we call this the Rare Roundup.
Okay.
I know you guys have been super excited to do it.
Shoot. We're ready.
So, what's your favorite GTA neighborhoods?
Mine would be Parkdale. I lived there for about 10 years. There's just a lot of characters. Good restaurants.
Yeah.
High Park.
Awesome. Yeah, close to High Park, close to Trinity Bellwoods even. Like you're kind of in the middle of a lot of
West.
things. Good vintage shopping. And yeah, I love Parkdale.
I love it too. But I have to say, there's something about the beaches for me.
Yes, me too.
I never lived in the beaches, but I've always worked in the beaches. And I remember I moved to Toronto in 2006 and coming into the beaches, and I was like, oh, this doesn't feel like Toronto. This is a community. This is nice. This is homey. And I've been so fortunate to always have had an office in the beach and upper beaches areas. And yeah.
Also, you're a water sign, so you're close to the water.
Exactly. Yeah. That's where I need to be always.
Exactly.
So definitely, yeah, the beaches for me.
On the road, what is your go-to meal?
God. I love fast food. So I will eat McDonald's French fries any time of day, any day of the week. And maybe like a ice cap from Tim's.
Okay. And she's not like a big eater to begin with. So this was like the hardest question on your list of questions for her to answer.
It was like McDonald's French fries, hands down.
I don't do on the go, first of all, because I'm very virtual in my business. So that would be a hard question for me too.
You're also an amazing cook.
I love home cooked meals. Yeah. Not just Greek home cooked meals. Like I do Italian, I do Thai, I do Indian. But if I do, one of my favorite restaurants here in Toronto would be Impact Kitchen.
Oh yeah, me too.
Like
that's
healthy, yeah.
We go there a lot. We're there like
every day.
Yeah,
every day.
Not every day.
Okay, so there you go.
We go there.
So we used to go to the Dragon every day when we were
for the wings.
The wings, and the Chardonnay.
Shout out, Dragon. Green Dragon.
Yeah.
And in your opinions, what makes a mortgage broker rare?
I would say adaptability. Adapting to the client that you're working with, adapting to the market that you're in. That's the main thing. You have to be able to flow and just morph yourself a little bit, like depending on who you're working with. It was like the personality match thing.
Yeah.
I think that personalized touch and
that would have been my answer.
Yeah, I know. We kind of discussed this one yesterday, and I think I'm just kind of go ahead. Sorry,
It's a partnered answer.
Well, you just do all the talking. No, I was gonna say a holistic, personal approach.
Yeah,
I think people appreciate that. I think that's what builds lifelong relationships with not just clients, but these clients. A lot of them become my friends in the end. You know, everybody. Like you said earlier, no two deals are the same. We look at a client's lifestyle. We look at their short-term goals, long-time goals, their financial situation, and we really have to personalize the experience based on each individual client that comes our way.
I think we're coming back to a stage in life in general where people want the personal touch. Yeah. They're missing it, right? Because everything was so automated. Yes, I like
you like it.
I like it. I like it. I think only her.
Yeah,
At least she didn't bite me. Normally she bites me.
Sometimes I do bite.
She's always biting my shoulder. I don't know why.
It's right there.
I know.
It's so juicy.
It's on display for her.
I know, but I don't want it to be bitten. Only her. I have pictures of her biting my shoulder all the time.
So funny.
My point was, I do think that people are missing that. And I think they're going to be craving it for the next little while with AI and with all these other things coming in. Having that personality, a real personality on the other side is nice.
And someone who cares.
And somebody who cares. A genuine person who cares.
And they feel it and they appreciate it.
Exactly.
Yeah.
Well, on that note, let the people know where to find you. Anything specific you want to share with them, we'd love to hear it.
Our IG handle is mortgagesbyerin.ca. You can also email us at Erin@mortgagesbyerin.ca or Kandis@mortgagesbyerin.ca.
Or Instagram.
That's like IG,
you said
Mortgages by
Instagram.
Erin. It's all mortgagesbyerin.ca.
Oh my Instagram. See, I just aged myself.
They can contact you
Or they
guys.
can contact us.
and
Absolutely.
We know where you are.
Yeah.
We know where to find you.
Well,
This was
audience, please make sure to share, like, and
Subscribe.
Yes. And we'll see you next week.
Bye, everyone.
Bye, everybody.
Where should I live? Okay.
That's so good.